Good morning, everyone. Thanks for joining us again this morning for LaPorte Cafe. And we're back and ready to discuss some trending topics that we see affecting our public sector clients. Just a little bit of housekeeping before we get started. All attendees are muted with the video off and the chat function is disabled. Our presentation is mostly conversational with no prepared slides, and all questions can be submitted through the Zoom Q&A portal down at the bottom of your screen. My name is Lester Richoux. I'm a director here at LaPorte in Audit and Assurance Services, and with me today is Lindy Stonecypher, a director in Accounting Services. And today's topic is the required informational returns. We know a lot of folks are in the thick of things getting these processed, so let's get started on just a little bit of the basics. So Lindy, what's new in 2022 with calendar year filings?
Good morning, Lester, and good morning, everyone. Thank y'all for attending. Mostly what's new for 2022 is going to be related to Louisiana. Louisiana is now requiring, they implemented it last year but deferred it because they weren't prepared. And so for 2022, Louisiana is requiring that any 1099 NECs being filed with the IRS are required to be filed with Louisiana if the services are being performed in Louisiana. It's sort of difficult. For the most part, all the services are going to be performed in Louisiana, but if you think there's one that's not being performed in Louisiana, it's not going to hurt to file that one. In addition, Louisiana's e-file requirements are if you have 50 or more 1099 NECs or even the W-2s, you are required to e-file those. You can use the LA Wage website to do that. And while it's not new, people do tend to forget that Louisiana has required from a couple of years ago that forms 1099 miscellaneous are required to be filed with Louisiana if the amount is $1,000 or more, if it's a rent or royalty payment, or the payment is made to a Louisiana non-resident. So if you're renting a building from and paying rent to a landlord that is a non-resident of Louisiana and you pay them more than $1,000, you're required to file that 1099 miscellaneous with the state of Louisiana. The 1099 NEC and 1099 miscellaneous, they added that 1099 NEC a couple of years ago, so that's not really new for this year.
And I think the big question we get, Lindy, is are government agencies required to file forms 1099 NEC and 1099 miscellaneous?
Yeah, and it is something that governmentals think that they don't necessarily have to do, but all for-profit and governmental agencies are required to file forms 1099 NEC and 1099 miscellaneous.
So let's just cover some of the basics about the 1099 NEC. Can you go over those for us?
Sure. The payments, if it's more than $600 or more, 1099 would be required. If the payment is for services to someone who is not your employee, an independent contractor, to include, but it's not limited to, so these are just some examples: repairs, maintenance, garbage collection, professional services, director fees, labor plus parts and materials, if the parts and materials are incidental to the actual service. So if you have to have repairs to your vehicles, that would require a 1099 NEC. Also, if the payments are made to a single member LLC, a partnership, or an individual, the requirement is to file those. If it's an S corporation or a C corporation, you're not required to file those unless you're paying an attorney. Attorneys, it doesn't matter what type of entity they are.
And then let's go over what's required to file the form 1099 miscellaneous. I know it's a little bit different.
Sure. The 1099 miscellaneous now, the most common type of payment that should be reported on the miscellaneous is if you're paying rent. And it's, again, it's $600 or more with the same single member LLC, individual, or partnership. And those are the ones that the 1099 miscellaneous. And there are some other payments that would fall into the 1099 miscellaneous, but they're pretty uncommon. So if you have anything that you're unsure of course, you can reach out.
And I know you mentioned the exemptions. And so what's the best path for a governmental agency to just figure out what type of taxing entity the vendor is, and how do we normally go about that?
Sure. We recommend that a W-9 be received from each vendor, no matter what. We say all vendors, um, just to be safe. You should certainly get that W-9 prior to payment. So if you have a new vendor, I would get the W-9 from them before you actually pay them. So when they're hired to do the service, because sometimes they're a little hesitant after the fact to give you that W-9. On the W-9, it's going to provide you with the federal identification number, the business name, the business address. If it's an individual, they're going to provide you with the social security number and their name. If the W-9 is inconsistent as to the type of identification number provided and the name, then you could receive a matching notice from the IRS. Typically that takes 1 to 2 years. So if you have a W-9 that it just doesn't make any sense, it's a good idea to go back to that vendor and say, hey, look, what type of taxing entity are you? Because that is the determining factor. The W-9, they have to choose on that form what type of taxing entity they are. If it's a business and they have a business name, then you would expect to see a federal identification number. If it is an individual, then you would expect to see a social security number. A lot of times we get either a business name with the federal identification number, with the social security number, or an individual name with the federal identification number. Those are going to end up with matching notices from the IRS. And like I said, it takes them 2 years, 1 to 2 years to get you those notices. And by then you're like, the vendor's gone. What do I do now? And there are all sorts of rules related to if you're continuing to pay somebody and you don't have that proper information, then there's backup withholding requirements. We don't want to go into all those terrible details, but just know that it is important to get that W-9 information correct. One of the biggest questions that we get is, what really is a single member LLC? What does that mean? And a single member LLC is a legal term. And many businesses today, individuals are filing with the state of Louisiana as an LLC entity. And so if a single member LLC can be an S corporation, and that just means that they have filed with the Internal Revenue Service to become an S corporation. So they're supposed to complete that W-9 saying, hey, I'm an LLC, but I'm an S corporation. If you're an S corporation, if they're an S corporation, then of course you don't have to do that 1099 form for them. It's not a requirement that you do those.
And I think one of the biggest things you mentioned is getting that W-9 first before you maybe even send them that check or when you engage them in that service, because I know from personal experience hearing clients talk about it right now, it's kind of difficult to track down a vendor sometimes when you're trying to file this in this short period right now in this month of January, and you're not getting the response that you want. You're trying to file this, and then you might get something with some inaccurate information. You get that matching notice eventually. It's hard to cover those bases in the 31 days that we have in January to get these things filed, right, Lindy?
That's correct. And you bring up a good point about the January 31st deadline. So forms 1099 NEC are required to be filed with the IRS and Louisiana. Well, Louisiana has a different date, but with the IRS and given to the individual, the recipient, by January 31st. That is the deadline. There are no extensions for the form 1099 NEC. With Louisiana does have a different filing due date for these 1099 NECs, which is February 28th. But for all purposes, it's so much easier just to file that at the same time you're filing with the IRS. And again, a reminder, if you have 50 or more, you're required to electronically file those with Louisiana. The filing requirement, the e-file requirement for Louisiana is a much greater number. It's like 250. So those can be paper filed with the IRS. The other thing I was going to say, the 1099 miscellaneous due date, it's due to the recipient by January 31st. So all forms are due to whoever the person is, whether it's an employee, a vendor, they're due to those people by January 31st. And then the IRS for the 1099 miscellaneous, those due dates are February 28th. So it's a different deadline date with the IRS for the 1099 NEC or the 1099 miscellaneous. I don't think too many of our governmentals would have a 1099 dividend payment or 1099 interest payment. Those aren't real common with our governmental agencies, but those due dates are not till February 28th. So the 1099 NEC does have that January 31st deadline date with the IRS.
And I think you mentioned some of the intricacies of filling out these Form 1099s. Any other tips you have as far as, how to approach the federal identification number, or whether you put the name of the individual or social security number on the form, or any other advice on that?
Yeah, I mean, I would just be really cautious when you get the W-9, take a look at it, make sure that who you're writing your checks to. So if you're generating your 1099s from your software, then typically it's going to try and generate that 1099 based on who you're writing the check to. We do see cases where we're writing a check to one name, maybe the individual, right? But they give us a W-9 that's got the business name and a federal identification number. You need to make sure that that gets changed in your software. Those checks should be written to the name that's on the W-9. And that's also a sticky point sometimes with when you're dealing with vendors, is they want the check in a specific name. We have had, technically you're supposed to write the check to the name that's on the W-9, right? But if you come up and you're at the end and you're preparing your 1099s, at the very least, change that 1099 at that point before you submit it. And again, go back to the vendor if something doesn't look right on the W-9. It should be signed and dated. You don't have to get those every year. That's not a requirement, but it is recommended to get those periodically. People's, they may get, your vendors may get different advice from their own tax consultants, and they may change something, but then they don't notify you. So it's a good idea to get those W-9s on a reasonably consistent basis. 1 to 2 years is a recommendation. Again, it's not a requirement, but it is a recommendation.
And I think you talked a little bit about the single member LLC and whether or not they could have elected to be an S corp and uncertainty there. I mean, with general advice, if they haven't checked the box, send in the prepare form and send it in, and just let it happen.
Let it happen. We do send, we have our own clients who prefer that we send the 1099s even to some of the S corporations or C corporations. Better to send it than not send it. And you don't want to send a 1099 without an identification number on it. It automatically triggers backup withholding. So you really need to get that number from the vendor. And if you have a vendor that is just giving you a hard time, don't keep that vendor. That's not somebody that you want to be in business with if they're not willing to provide you with the appropriate information to file the 1099. That means, it could mean that they are not being 100% honest on their own tax returns.
All right, so we've covered a bunch of the information about the 1099s. Let's talk a little bit about W-2s. And I know one of the common common questions we get and field on a day-to-day basis right about now is fringe benefits and taxable wages and those kind of things. So let's dive into that.
Sure. And fringe benefits are somewhat unique for our governmental agencies, and they don't always think about what is a fringe benefit. So there are two really common fringe benefits that get forgotten about. One of them is excess group life insurance. And if you have, and most of our governmental agencies do have a multifaceted benefits package for their employees. That package probably includes group health insurance, some additional AFLAC or cancer policies, maybe some added dental, supplemental life insurance. And so typically there's a pretty good benefits package with our governmental agencies. The group health plan typically includes some form of a standard health insurance amount for everybody. For example, if you're enrolled in the health insurance, you automatically get, depending maybe on your level in the firm, in the entity, you may get, $20,000 of life insurance or $30,000 of life insurance. And so you have that, and that's automatic. But then you have the option to add supplemental life. And so you add supplemental life of $100,000. Well, now you have what's called excess group life insurance fringe benefit, which is if you have the total health insurance from all your packages of greater than $50,000. There's a special formula that you have to go through. It's a calculation. We do them. We help several of our governmental agencies with those forms. So they'll provide us with the information and we apply. There's a table that the IRS uses to determine the actual excess amount. And that amount has to be added to the employee's wages, have taxes calculated, and then subtracted from their wages. So it's a non-cash fringe benefit, meaning we're not giving them the dollars, but they have to pay taxes on those dollars. It may be, it could range anywhere from $40 or $50 up to the most I've seen is about $1,200. So it really depends on the calculation is based on their age, the age of the individual, of the employee. And so if you have somebody who's in their 60s and they have a good bit of life insurance, then of course their amount that's added to their W-2 is much higher than somebody who may be 25 and they don't feel they need as much life insurance. So that is one area that does typically get forgotten. It also doesn't matter if the employee is paying for the health insurance after tax or pre-tax. There are some certain, like most group health plans are in a cafeteria plan. Some of our governmental agencies pay 100% of the employee's health insurance or a major portion of the health insurance so that the employees don't have any or much cost associated with their health insurance, and the life insurance is part of that component. Typically, the supplemental is after tax, meaning it doesn't get subtracted from their wages in order to calculate the taxability of that amount. Doesn't matter if you have greater than $50,000 in life insurance, then anything above that $50,000 is considered a taxable fringe benefit. It is subject to all taxes, federal taxes, state taxes, Medicare taxes, and some of our governmental entities do have Medicare. I'm hesitant to bring that up, but if you have a Section 218 plan in place, you know it because you're paying not only Social Security, you're also paying into your governmental retirement agency. So most of those entities really know if they have that 218 plan, but it is subject to taxes across the board. A lot of people don't realize that. One of the other really common fringe benefits is the personal use of an automobile. So if the vehicle is owned by the governmental agency and an individual is able to bring that vehicle home overnight for whatever reason, a legitimate reason, right? Commuting expenses to and from the business, the entity, are considered a fringe benefit. And the fact that the employee may be using that vehicle for other personal purposes. So any mileage, the total mileage should be tracked for the vehicle. The personal mileage should be tracked. I recommend either tracking the personal or the business. Sometimes it's difficult to try and write down everything you do, right? But if you get your beginning mileage at the beginning of the year, your mileage at the end of the year, and then you track every time you use that vehicle for personal purposes, right? That's probably the smaller of the numbers as opposed to what you're using it for business. It should be anyway. Then there's a special calculation, of course, that the IRS has to figure out the amount of the fringe benefit. And again, that ranges based on the personal miles to the total miles. It's also based on the vehicle itself. You have to assign a value to that vehicle. And so the calculation is done based on that. And that also a fringe benefit that's taxable. When I say across the board, that means all the taxes, federal, state income taxes, Medicare, and then some of you out there may have Social Security benefits. It is not, you don't have to, it doesn't get included for retirement calculation purposes, which is usually a question that we get asked. So those non-cash fringe benefits, and both of these are the group life insurance and the personal use of the automobile. They are lost my train of thought, but they are non-cash. So we don't actually give them the money, we add it to them and we subtract it. We calculate the taxes and then subtract it from there.
I know one of the other big questions we often get is, let's talk about part-time employees and Social Security. And the common question is,
yeah, that's always a difficult issue. So part-time employees are subject to Social Security and Medicare. So they are not eligible for the retirement plan. So since they're not eligible for the retirement plan, then you do have to pay Social Security and Medicare on those individuals. So just make sure you're tracking that, you're tracking their hours to confirm that they are really part-time and not full-time. 30 hours is considered a full-time employee.
Let's talk about federal and state unemployment real quick and go.
Yeah, and unemployment is also another sticky area with governmental agencies. So governmental agencies, state, and when I say governmental agency, I guess I'm being vague, but that's state agencies, local agencies, special districts, everybody, state and federal even. You're not required to pay in federal unemployment. That's the Form 940. That is not a requirement for a governmental agency. State unemployment for Louisiana, and I believe Texas, well, Texas may have some different rules, but for Louisiana, we definitely have to pay in state unemployment. Municipalities have a special unemployment that they can utilize to pay in their unemployment. Most everybody else would use the Louisiana Workforce Commission, which is a state agency, and the rates are determined based on what the employee is doing for you, right? So you have to tell the Louisiana Workforce Commission not only that you're a governmental agency, but what you do. And then even at the employee level, you're supposed to tell them what they do. And they come up with this calculation and they determine a rate. The rates range pretty much from a 0.9% up to, it can be 4, 5, 6% on the first $7,700 of wages. Once an employee reaches that $7,700 level, then they are no longer, their wages are no longer subject to state unemployment. Now, with governmental agencies, you are allowed to either choose to be an exempt entity, which does not mean you're exempt from unemployment. It just means that you don't pay in on a quarterly basis to the Louisiana Workforce Commission. What it means is that you are self-funding your unemployment. So if somebody leaves you and goes on unemployment and you're considered exempt, right, in quotes, not exempt from unemployment, but you're exempt with the Louisiana Workforce Commission, then you have to pay that. You have to reimburse the Louisiana Workforce Commission for that unemployment that's paid out to that employee. So we see that in agencies where there's very little turnover. If you have a lot of turnover, you probably don't want to be considered exempt with the Workforce Commission. Yeah, I think that covers that.
Let's just touch real briefly on group health insurance and some of the required reporting that goes along with that. I know we get a lot of questions about that, and even some folks have maybe never even heard of these forms, the 1094
Right.
and then 1095C.
Yeah.
So let's go over those a little bit.
We would like to be able to ignore those forms, but the Affordable Care Act was implemented back in 2015. Any employer that has 50 or more employees is considered an applicable large employer. They are required to provide a group health insurance plan. Typically, that's not an issue. That piece of this is not an issue with governmental agencies because most of them are providing that group health benefit. But again, a reminder, full-time is considered 30 hours. And I misspoke. I said full-time employees. It's full-time equivalent. So if you have 50 or more full-time equivalents, and of course, there's another calculation associated with calculating, an equivalent and how many full-time equivalents you have. If you're close to that 50, it's a good idea to do that calculation or get some help to do that calculation. If you are, then as an employer, you're required to file a Form 1095C and a Form 1094C, which the 1094C is the transmittal. The 1095C goes to the individual employees for all your full-time employees. So you don't have to do part-time employees, but you are required to do it for all full-time employees. The other issue is that if you're self-funded with your insurance, and again, that's something that you should know. So even if you're self-funded, you may have a broker like Humana or some other entity that's handling your health insurance. But if you're self-funded, additional information is required on that form. You have to report all of the dependent information on that form as well. And they're very complicated forms, and the IRS has sort of permanently, hopefully, extended that due date they are due to the recipients for this year, for 2022 on March 2nd of 2023. They're due to the IRS at the end of April if you're e-filing. If you're not e-filing, then of course they would be due March 2nd.
And I know most folks have hopefully been filing those forms, but as far as we understand, the IRS is starting to ramp up the penalties and failure to file on those. So
they've kind of been given some leeway on those penalties and abating those, but we are seeing more and more penalties. And there are a couple of different types of penalties, and again, it's very complicated. So you just need to reach out about those if you're not familiar with them, never heard of them, and you have more than 50 full-time equivalents.
All right. Well, thanks, Lindy. I think we've We've covered quite a bit of the reporting requirements, and hopefully we've answered a few questions you might have. We've reached the end of our time here today. We really appreciate everyone joining us, and this was our final LaPorte Cafe for a little while. We're going to take a brief hiatus while we get busy on doing some reporting, helping clients with some reporting. And getting
A lot of
some
reporting.
and we'll be back hopefully later this year. We thank you so much, and everyone have a great day.
Thank you.